Hello, welcome to Empower Capital. Today we're going to talk to you what's going on in the market right now. People are panicking, people are messaging me and texting me, and now we're really going to figure out who the true real G's are. We're going to know who the real G's are in this market. People talk the talk, but when things happen, they begin to panic. I had some of my friends reach out and say, have we hit the top yet? Are you still going to hold on BTC? What are you doing? Are you going to sell? And relax, people. I'm like, when I say buy the dip, I mean buy the dip. I am not bluffing. So that's usually what I do. When I say I'm going to buy the dips, I try to buy the dips on assets that I understand. And once you understand the asset and know the value of the asset, you don't panic when the market pulls back 20 to 30, right? So BTC has pulled back and people are panicking. I had one of my wife's family members, who's a banker, reach out saying, are you guys doing okay? BTC has pulled back tremendously. Are you guys okay? And I laughed. Like, when the price of avocado drops, are you going to feel bad that I went to buy more? No, right? So don't feel bad that BTC or Bitcoin dropped 20, 30%. It's an opportunity for me to buy more if I have capital. Yeah, because it's expensive when it's at 126. Just to with $10,000, you can barely get, 1/10 of a Bitcoin, right? With $10,000 as an example. So yeah, I mean, yes, we want to go to the moon, but at the same time, it's a win-win situation because it's an asset that we know is valuable and it's been adopted, and the banks and everybody's on board. So there's nothing to worry about for me. And yeah, but today I want to really talk to you about how do I know the bull market is over? And the reason I'm holding confidence because I know that the bull market is not over. There's certain data I look at, there's certain information I see, and when I look at these things, it reminds me that we have a long way to go. And I'm going to show you in another episode how to look at some of these data, right? Such as QTQE, which is quantitative tightening, quantitative easing, which controls liquidity. And then we also want to look at the interest rate schedule. How do we know the interest rates are going to remain being reduced or low? How long are we projecting this to be so? So when you understand that, then you'll have a good picture as to what the future may look like. It may not be with certainty, but at least you know what it looks like, right? You have an idea. And as we go closer in months and we go to May 2026, June 2026, September 2026, you're going to see the data also updated, all right? So you can also make your judgments accordingly as the new data comes in, as new information changes. You also have to be adapting your strategy, your exit strategy, your outlook, and so on, right? So as of now, so what the data is showing me is that the top of the bull market, whether in the stock market or risk assets like Bitcoin, the top looks like it's going to be around late 2026 based on my own research. So once again, remember that anything said here is not financial advice, right? This is not legal, tax, or financial advice. This channel and the information I'm sharing is for educational purposes only. Please make sure to do your own research. That's the disclaimer. And let's get back to what I'm saying. So how do I know that Q4 2026 may be where the top is, right? I'm looking at data, right? So I'm not talking out of just thoughts and, what I think. I'm looking at certain data, like I said, interest rate cutting schedule looks like it will continue to be cut based on the FedWatch CME website. You can see what they forecasted on interest rate cutting schedule, right? It goes all the way to Q4 2026, even possibly Q1 2027, right? So it's a delayed cycle. And I have some potential ideas as to, that's just speculation. That part is, I have some potential ideas as to why this cycle is slightly different and has been prolonged or delayed, unlike the last two cycles, right? So we will look at that, and I will give you my as to why that is so, why this cycle seems to be different, why it seems to be delayed from the way it was in the last two cycles. But for this quantitative tightening and quantitative easing, we will also show you some information and data on certain websites to show you why the bull market is nowhere near done. All right, we're just getting started. So when you know all of that, then you're able to sit there with confidence without nudging, without being scared or nervous and so on, right? Because you're operating off of data, right? So before we even go further, if you go and look at BTC, like example, Bitcoin charts or some of the stocks charts, you can see that there are certain resistance and support levels that we hit, and now we are trending back up. And if you go watch, I wouldn't be surprised within the next few days to a week, within a week from now, we're probably back above 100, right? So I'm not giving financial advice, but because of the level that we hit right now, right? So when you look at the price that we hit around 88, 89, 80, around that time. Now, if you scroll back all the way back to 2024, November, December, you notice that we were doing the same thing around the time. We were hitting that price level. What does that tell me? It's called price action, right? So when you see the price hitting those levels over and over and it's hard to break it, it begins to create a floor. So November 2024, you're going to see that floor being created. And then if you go further down, you see later on in 2025, you saw that we broke below, but then we were struggling to hit above that 91,000 because that level has become a significant level. It was a floor and it was a ceiling at the same time, a support and a resistance in technical analysis language, right? So now that we've exceeded way above it and we've come back down, it's looking like a strong support where it's gonna be like a floor, right? What does that mean? That means there's a lot of buy orders from traders, from institutions, from investors that are trying to buy when the price hits those targets. So for me, when I see that dip and I've been able to accumulate more capital, more cash through my job, through different avenues, then I can now begin to buy those dips. And that's the purpose of why people buy dips, because sometimes they don't have the capital, they don't have the money to just be buying dips, right? They just keep buying. They don't have the money. So sometimes people have to wait, right? And when those dips happen, they're able to buy right there, right? Because they just can't buy on an instance. They have to accumulate that money through their job, through a business, through other means, and then be able to buy those opportunities when these dips happen, right? But the key is investing in assets that are legitimate, that are bona fide, that are good, that you understand, right? So once you know the asset, you shouldn't trip, you shouldn't worry, you shouldn't panic because you know what you're dealing with. And that's how I feel about this asset called BTC and certain stocks as well in the stock market, right? So like NVIDIA, for example, I don't panic on NVIDIA because of the trend of AI. And you can't have AI without GPUs. So NVIDIA and these chip companies that are manufacturing these chips, the key players, I believe, will do well, right? Because of this AI need for GPUs and building supercomputers and so on, right? So many people are partnering with NVIDIA, and that's why they continue to do well, even with such a huge market cap, right? So yeah, once you understand the asset you're dealing with, the fundamentals, right? If the fundamentals haven't changed, then who cares about the technicals, right? The technicals help you and all that stuff, but I'm not tripping. I'm not panicking because of that. And then lastly, once you know what's going on at the macro level, right? The economics of the economies, right? Once you know what's going on, you'll have an idea as to where we are at in the cycle. So on another episode, I'll show you more in depth as to why I believe this cycle has been delayed. But for now, let me show you one quick thing here where you can understand what's going on. Just a quick, I want to share my screen real quickly. And then let's take a look at what I want to show you, just to see like the interest rate schedule as an example, and as to why I think interest rates may continue to be reduced or maintained low for some time, right? And if you watch my videos, you will know that the benefit of having interest rates low is that assets are risk assets. When interest rates are low, it's the cost of capital. Cheaper cost of capital allows you to buy, right, easier, right? It allows them to buy. With loans to buy stocks, with loans allows institutions to borrow to buy, and they're able to do that. And so that's the beautiful thing about cheap cost of capital. Let's take a look at this right here. That's an example, right? So as an example, right, this right here is a future forecast of interest rate cutting schedule. These are the meeting dates of the FOMC, the Federal Reserve. So when you look at 375 to 400, all right, this is the next meeting that they have, December 10th. There's a 67% chance that they will keep interest rates the same. 32% chance that they'll cut interest rates. January 2026, January 28th, 2026, 81% chance that they will cut. And then they'll maintain, cut, all right, cut, maintain, cut, maintain. That's how far we can see. And right now they're saying maintain. Every month, this is going to get updated. Every day, new data. Every month, new data, right? So we're going to keep seeing as we keep going. But as of today, this is the picture that we have, is that they're going to maintain all the way to, at some point, they're going to keep cutting all the way to September 2026, we know they're going to keep cutting, right? All the way to September 2026. After September 2026, we don't know what they're going to do, right? Based on the forecast, right? So the moment they begin to raise rates, that's when I start packing my bags, because they begin to suck liquidity out of the market, because then quantitative tightening will start happening as well. Right now, we're about to move from quantitative tightening to no more tightening to quantitative easing. If you don't know what that means, Google it, go watch ChatGPT to explain what quantitative tightening is. Just quantitative easing is them pumping liquidity, quantitative tightening is them sucking liquidity. And then there's the middle ground where it's no sucking liquidity and no pumping liquidity, right? Which is also good because they're not sucking in liquidity. Right now, they've been sucking liquidity and they're going to actually stop December 1st. But we'll talk about that another time, right? So for now, I just want to let you know this is what's going on. This is why I believe that we are not nowhere near the end of the bull market. So don't panic, right? As the Liverpool motto says in the Premier League, all right? Keep calm and carry on, all right? You never walk alone. So follow this channel, you never walk alone, all right? So I'm going to help you. Make sure to subscribe, like, share, comment to enhance this channel. And I think 2026 will be a great year. I think December is going to be a great month as well, but I believe that 2026 was going to be very good, and especially the second half of 2026 in the capital market. So have patience, stand strong, don't give up, don't give in, weather the storm, and gain understanding. We love you. God bless you. Stay safe.